I'm from StoreFeeder. My background really is it's multi-channel sales. Needless to say, multi-channel to me means across multiple marketplaces, but also your websites. I could really have done a presentation about StoreFeeder today, but it's become apparent in the last couple of years we're seeing ever more clients making really fundamental mistakes. So really, rather than talking about StoreFeeder and what I can do for you, I'd rather just add a little bit of value to your lives and talk about what not to do. Because quite critically, one of the key things that we always get asked is, if I've got 10,000 line items on my website, can you distribute that onto Amazon or eBay or Play or any of these particular sites that you might want to trade on? And the answer is yeah, I can do that for people, but I think one of the key things that I really want to highlight to you all is, and it sort of touches on the profitability thing that Deepak was talking about, is that if you list 10,000 line items on your website, it's going to cost you nothing. If you list 10,000 line items onto eBay, it's going to cost you an absolute fortune. So, my first and the biggest piece of advice I can give to absolutely anybody is, when you're doing your analysis, do a test trade on different types of items, because there is a universal maxim that says 80% of your revenue is going to come from 20% of your stock. So when a client approaches me and says, can you? I say, yes, of course I can. Would you advise that you do that? Absolutely not, because the maxim applies in the real world, i.e. in the high street and on your website, but equally that applies to Amazon and eBay. Now you bear in mind, if you're making a nice healthy profit on the first 30% of everything that you sell, i.e. your run rate items, the popular items to the marketplace, those items where you see 80% of your revenue, if you continue then to supply the rest of your inventory into eBay and the various costs associated with doing so, you are going to eat into the margins that you make on the top 30%. And it's amazing. There will be people in this room that are at director level, they're running businesses, they've got staff below them. I encourage you, if you're at that level, tell your staff about it, because they're employing managers to do eBay or Amazon, and what they're doing is listing their entire inventory, and they're coming to us later on and asking why they don't make a profit. So when we do the analysis, simple things. They've got an anchor store costing £400 a month. Well, why are we still not making a profit? Well, firstly, because your £400 a month eats into your profits, but secondly, simple things like they've chosen to put all the enhancements on, like extra pictures or subtitles or that type of thing. And that eats so heavily into the profit lines that what they'll do is they'll come to us and say, can you help us make a profit? Because our current provider can't do it, and the provider before couldn't do it, and the provider before that couldn't do it. And one thing that they've not done is planned. They've not done a test trade. They thought that their 100% inventory of 10,000 items is going to yield them success. The reason I chose to talk about this today was because a lot of you will be thinking about dropshipping, about feeds from your suppliers, about the methodologies that didn't exist 2, 3, 4 years ago. And the encouragement that the suppliers will give you will be quite simple. Here's 10,000 line items, why don't you list them there and why don't you list them there? Because we make it easy for you to sell our product. Bullshit. If you get that 10,000 line item feed and you throw it straight into eBay, you're going to fail. It's as simple as that. I would encourage any of you that are unsure about where the math sits, just to do a little test trade on each of the environments that you intend to sell on. Your run rate items will clearly sell. I think that it's a no-brainer. If it sells on your website, if it's popular in the marketplace, then yes, your top 20% will absolutely sell. But before you then start going to 30% and 40% and 50%, you have to think, is that product going to be profitable? Because it's only profit that is going to see you successful in business. The unfortunate thing is, I've seen 5,000, 6,000 businesses in my time that have been successful on eBay that I've had personal involvement with. But equally, I've probably seen 1,000 that failed. And you have to think that, eBay is a great opportunity for you to take those 10,000 line items and to throw in, if you're sure that the bottom 70% will sell. But we're clear, I mean, the market itself will suggest that actually 80% of your revenue comes from 20% of your product. My view is actually more like 30 and 70. But, you know, it depends on what you're selling. And this math might not apply to you. So my encouragement to you would be, think about what Deepak said. You know, you've got 7.9% there that's eating into your margins. And my assertion is that if you're not careful, then those 70% will be by wiping out all of the profit that you're making on the top 30%, and you will fail. So I don't want to be the harbinger of doom, but it's good advice, and it's advice based on thousands of conversations that I've had. Your eBay consultants, Liz and Jane, they'll tell you exactly the same thing. It's all well and good saying that you've got a brilliant product for eBay, but you have to look at the popularity of that product. Use tools like, I don't know, Terapeak and good quality tools like that. Speak to your eBay consultants before you go selling on eBay, because you might be selling on your website now and wish to go multi-channel, but the truth is, it's not right for everybody. Or if you do want to go to multi-channel, make sure that you're choosing your top 20 or 30% of your products before you do, and then move out from there in a slow and measured fashion. My second point is something that, again, Deepak touched on. He said, well, it cost you £7, what was it, £2,500, £3,000, but we've not accounted for the time in that. Well, Jesus, what sort of business doesn't account for time? Again, those very same people that are failing are the people that have not accounted for the time. Simple stuff like that. Oh, well, we made 30 grand last year. Did you? Okay, what did you pay yourself? Oh, no, I didn't pay myself. Well, you know what? You're going to have to account for time as a business expense. So profitability doesn't come from having a great idea. It comes from having great planning, great research into your product, and at the end of the day, a math that says that's where the profit sits. If you're not accounting for time, and you're not accounting for, well, any other sort of what you would call sundry expenses, you know, the cost of running your offices, the cost of your lighting, your heating, whatever it is, it all needs to be accounted for. You speak to any accountant about running your business and he'll tell you that from the start. But people forget. You know, I've got clients there and they're making a healthy profit, but they're still not paying themselves because they think their time investment in the business is free of charge, but it's not. So I guess what I'm trying to encourage you to do is think about profitability in a more structured and measured approach. Some of you will already be doing this, so pardon me if I'm teaching you to suck eggs. But when you're looking at your product lines and your feeds from your suppliers, think about the time that it's going to take you to list those products. Think about, and specifically, the big point that I want to leave you today is the 80-20 maxim works in e-commerce, it works on Amazon, it works on eBay, it works on every single one of your channels. So, you know, it's not a massively, how can I put it? It's not one of those things that people have at the forefront of their minds. They look at profitability and they talk about things like, you know, the difference between the buy price and the sell price. And that's it. That's as far as the math has gone. So I'm encouraging you, every one of you, there will be some young businesses in here. Account for everything. Account for your time, account for the effort, the shipping. Don't just look at buy price and sell price because it's a skewed math. We've got clients funded by iwoca who've gone over, they've gone to China and they've bought a big container full of stuff. But what they've done is they based it on a wider group of products than the top 30%. And what's actually happened is they've paid iwoca back and they've made a little profit on it. But what they really should have done is looked at the real high-level margins. The margins would have been so much richer if they just concentrated on the top 30% of their product ranges. It is as simple as that. So that's it really. Account for your time, plan effectively, and look firstly at your top 30% and then work out from there. And that's it really. I didn't really come with a major plan, but you know, it's a discussion topic that I think each one of you will probably go away and think, you know, we knew that already. But isn't it's good to hear from somebody who's got this, you know, I've got a big amount of experience with e-commerce traders across multiple channels, and people assume that the math is right for their eBay, or the math is right for the website, but that doesn't apply to any other channel. You know, I'm saying whatever you do on your website, the likelihood is those top 30% are going to be popular on eBay and Amazon as well. So don't go spending good money after bad, is what I'm saying. if you're going to take investment and you're going to go buy products that are popular in the marketplace. Use eBay consultants, use tools like Terapeak, and don't be tempted to just flood the market with 100% of your product likes. Thank you very much.